So today I'll be giving a quick breakdown of this BTC USD sell I took. I took one on Sunday and one yesterday. So let's go over it together. First thing first, let me clear off my chart. So on this BTC USD chart, there is something I want you to take note of. In as much as we are trying to check where price is coming from, and where price is likely to go to, we need to pay attention to what the hour time frame is doing, just like we always do. So based on this BTC, the fact that price created a new all-time high, it is a very, very, very important details for us to go over on the much more higher time frame. So we'll be going through the weekly time frame and the monthly time frame as well, for you to see some certain detail that might not really be visible to you. So first thing first, on this monthly time frame, just like we know, for the important area of liquidity, if previous monthly high is taken, minimum target previous weekly low. If previous weekly low is taken, minimum target previous daily low. And if previous daily high is taken, minimum target previous daily internal. We already know that, right, from the previous videos. So on this BTC chart, you would observe that price, this was this is August and this was July. So this July is basically pointing to the previous month's candle, right? So this is the previous month's high. So let's just label it as previous month's high, right? So if this is the previous month's high, where are we expecting price to get to? We're expecting price to get to, at least, if price successfully sweep that previous month's high, we are expecting price to get to the previous week low, because this is the weekly candle that actually swept this. So the previous week low is this. So I've identified my target. That is my first thing. So since we've identified the target, as at, this was Sunday, right, and this is this week. So as at this point, what would be my expectation? My expectation would be, how can I join this particular move to actually get to this target? That would be my next point of concern. So let's scale a bit lower to the daily time frame. So on the daily time frame, it's Wednesday, this is Tuesday, this is Monday, and this is Sunday. So now, as at Sunday, as at my point of analysis, price landed on this daily breaker block, and if you pay close attention, you would observe that it's also aligning with this open close candle, or buy to sell candle, anyone you call it. So basically, this is where price came to as of that Sunday. So now we've identified where price is coming from, and most importantly, like I said, if price lands on a particular point of interest, we want that point of interest to be mitigating another point of interest. I've stated that several times. So since we have that, price landed on this point of interest on a daily time frame. So basically, on the 15 minutes time frame, we want to understand the kind of liquidity that was taken before price entered into that daily block, because this was the old block I marked from the daily time frame, right? So if that is the case, we want to understand the kind of liquidity that is being taken into that point of interest before we can actually validate what we are doing. So I'll be using my daily separator. Just hold on to this date stuff and turn on the session break. So now, what do we see before price entered this point of interest on a daily time frame? This is also our supply zone. So you would observe that we have this highest point of this particular day, right? So we have this highest point. I'll be labeling this highest point as my previous day high, because that's the highest price of that particular day. And also, if you look closely, it is also aligning with this equal highs. So we have previous day high, previous day high with equal highs. So that is our liquidity to be taken into the point of interest. So if that is the liquidity to be taken into the point of interest and price has tapped that point of interest, what's our necessary target? Our necessary target is to take a sell from here and target the internals of this same day, right? But due to the fact that I was analyzing from the other time frame already and I know the expected targets, like the swing target that price should get to, so I don't necessarily have to target just this daily whatever. I can decide to target as much as the internals from here, because this is the major target we are looking at. Liquidity of higher degree on the monthly time frame, targeting the weekly low. So that's basically it. I can target this, target all these internals as well. So now let's pay close attention. This is now the interesting part that I think you should pay attention to, this entry, because I have not explained this particular entry before. So now for the entry I took on this stuff, we are probably just used to the double break or single break, liquidating highs and all. There is a kind of entry that I'll be explaining here that is kind of special to me, but I'll be giving it out on this channel. So now, while we have a point of interest like this, and price is creating some sort of compression into that point of interest, so now when we have a compression into a point of interest, meaning price building up some sort of trend line liquidity into the point of interest, all we want to see is price faking out of that trend line. After faking out of the trend line, price liquidating the high that created the fake out. This is something premium. Take your pyro and jota. So we have price faking out of this trend line, then liquidating this high that created the fake out. Then after that, you now want to pay attention to this liquidation must come with imbalance. This liquidation must come with imbalance, and also price dropping again must come with another imbalance, making what? Making double imbalance. So we call something like this, we call it parallel fair value gap, or some people call it inverted FVG. I think, yeah, some trader call it inverted NVG. Some people call it window imbalance, anyone you call it. So meaning you are having imbalance to the left hand side and you are also having imbalance to the right hand side. This is what I mean. We have consecutive candles following each other from the left hand side. On the right hand side as well, we have consecutive imbalance following each other. 3 candles with wick not touching. So the imbalance has to flow from the left hand side to the right hand side. That's the criteria. So now if that is the case, what are we now paying attention to? We are paying attention to the same order block that was meant to sell this breakout, because this breakout is a kind of signification that price is ready to sell. There are a lot of people trying to sell this retest, this trend line breakout retest. So stopped out, liquidating this high. So a lot of liquidity has been trapped into this region. So what do? We are paying attention to the order block at this left hand side, right? So this order block corresponding to that same parallel fair value gap will now be your entry. So meaning you'll be expecting something like this, price getting into this and selling off. Mind you, if you don't have that parallel fair value gap, it is kind of low probable. So in that case, you'll be selling something like this. So you can add this confirmation to your arsenal. Though you have to practice it a lot before you start implementing. Okay. So now let's pay attention to this. While price was trying to approach this point of interest, you would observe the build up, the compression, right? So meaning liquidity is being built, liquidity. Then price what? Price did what? Faked out of this trend line to actually do what? To trap, break and retest traders. Meaning those that are expecting this trend line to break and retest, they might be selling from here and covering the stop loss. So instead of that, what do you expect? You expect price to liquidate the high that caused the fake out. So once price liquidate the high that caused the fake out, what do? You are choosing the other block that caused the fake out, meaning the other block that pushed price out of that trend line. So in this case, this is the other block that pushed price out of the trend line. So you drag it to the right hand side. So now what else are you paying attention to? You are paying attention to the parallel fair value gap, meaning fair value gap was created before liquidating this high and fair value gap was created while dumping. So if you observe, we have this rectangle to the right hand side. You can see both left and right, we are having the fair value gap. So that is your criteria. You have your sell right here and your stop loss. Your stop loss right above this high. And what's our target? Target. So we have our final target right here. As you can see, I'm just hitting my final target here. So now, what are we doing next? Remember, this high is protected already, right? So if this high is protected already, we have a minor break right here and we have this major break based on market structure. But because of this impulsive move right here, price created a what? A breaker block for our continuation entry. And regardless, for every continuation entry, we are paying attention to the premium and discounts in order for us to sell at much more premium area of the range. From this high straight to this low, we ensure that our sell is happening around the premium. So you can see this breaker block is happening around the premium. You ask me that why are we choosing breaker block? It's basically because of this impulsive move, right? This impulsive move for a continuation entry. Breaker block is almost the same thing as our traditional break and retest, normal support and resistance. So we have this breaker block with this impulsive break, premium. So now, almost the same logic that was explained here for this confirmation entry will be used on this second confirmation entry. So what do we observe? While price was trying to approach that breaker block, we have high, low, high, low, high, low. That's our compression, right? So since that is our compression, we have it like this. So that's our compression before price taps that breaker block. So what are we expecting? We're expecting that high, according to that diagram, the high that created the fake out to be what? To be liquidated. And while the high that created the fake out was liquidated, we want to ensure that there is parallel fair value gap from both the left and the right side. Then what next? According to this, the other block that was meant to what? That was meant to hold. So you drag it from the left hand side to the right hand side. So you can have your sell directly from this, stop loss right above, and targeting the last point. So this entry type is almost the same thing as reclaimed block, but with some little tweak and some little extra detail. So just pay attention to it. Compression, fake breakout, liquidation, parallel fair value gap, previous bearish order block, then sell off. So that's basically the sell. As you can see, we have a nice risk to reward on both sides. Do well to share, like, and subscribe if you have not. So just a quick summary of what I've done. Previous month's high taking, targeting previous week low. Let's label it previous week low. Following the daily thought process, following the internal structure on the lower time frame to join the move for continuation entries, continuation entries, continuation entries till the target is met. So that's basically it. Drop your comment if you got value.